Welcome to Blizzard Fire. We hope this video helps fire up your solution.
You begin by pinpointing the transaction and its measurable effect. Read the source document and extract the date and exact amounts. This anchors your entry. Next, identify which accounts change, assets, liabilities, equity, revenue, or expense, and note whether each normally carries a debit or credit balance. Once done, allocate the magnitude to those accounts so totals will match. Make sure to record the economic substance, not just the label, because that determines proper classification and subsequent reporting. Now you calculate precise amounts and assign directions. Use double entry accounting. Every debit equals a credit, so draft both sides first. For complex transactions, break them into components and compute allocations. For example, split $1, 200 receipt into $1, 000 revenue, and $200 liability if deferred. Once you have figures, post them to T accounts or a worksheet to confirm running balances. If totals mismatch, trace back differences stepwise. Reconciliation at this stage prevents errors later. Finally, make the journal entry with date, account names, debit and credit amounts, plus a short description. After posting, review your trial balance to ensure equality and sensible balances. If required, prepare adjusting entries for accruals, deferrals, or estimates to reflect the correct period. If you encounter an imbalance, immediately recheck signs, transposition errors, and any omitted line. These are the most common causes. One troubleshooting tip: isolate the difference and divide by 9 to spot transposition mistakes quickly.
Thanks for watching. If you found this helpful, don't forget to like and subscribe.